still bear or still bullish, right? Above the shorter MA, been in an uptrend, and kind of telling you, all right, if you got some profits and maybe you're only up a couple percent, yeah, you probably don't want to watch those vaporize. Just go flat, right, or reverse or something, right? And as you can tell, and what Taylor's got here is pretty clear. Hindsight, obviously, armchair quarterbacking this is really easy, but when you're in the heat of the battle, it's not. So the next thing that I always pay attention to. So a little bit of a history lesson. When I started this a long time ago, these moving averages actually had a purpose, and I literally built them as a reversal point historically when we turned and bounced. So in this particular case, had this come down and bounced right here, I would have figured out what is the MA that would have been that, and I would have added it to the overall ribbon. And over the course of a year or so, I had a lot of these, as stacked as they are, and I saw intra year that they were all reversing either from below and being rejected or being supported as. So this didn't get like this is your hot butter analogy right here. It cut through, and you can tell was pretty severe, right? I mean, it basically just said, yeah, we're out, right? And now we lost it. We stayed below the short-term moving averages, these white things here, and as Taylor's got drawn here in the green, which is exactly correct. Life got really really bad pretty quickly. Um, so just as a point, whether Taylor you intended to do this or not, but this kind of crossing of the longer term MA, which is the cyan line, with the shorter term MA, is kind of like nailing the coffin shut. Right? Basically, when this occurs, I'm getting more bearish as we go into here, by the way, because we just can't seem to catch a break. And sure enough, life sucks, and this is getting pulled down and whatnot. So just when this thing gets pulled down, you get a day like this, right? You get this linear up behavior, linear up after coming on the heels of a linear down. I mean, this is serious. I mean, hold up a piece of paper, fold a normal 8.5 by 11 sheet so you can get a square edge there, and that's 45 degrees, right? And so basically, this was saying, take it off the table, and then it was flat into the close. That's interesting, right? Flat into the close. So the next morning, and I hate these signatures, by the way. I'll just start right off by saying a reversal off the bottom sucks. Like right from the open here. It just is not. Historically I've not seen it work well. And sure enough, we head up, and today looks absolutely banner. This was Wednesday's action. Looks great, except for this lagging indicator that's across the top where Taylor has circled. And there's a lot of information here. And this kind of faint red line that you see here is the zero line. And this is the difference between 52-week new lows and 52-week new highs. And it subtracts the new lows from the new highs. And because this is bigger, negative, it's negative. And the fact that this thing is just pounding the negatives. John Boyk, I think, is another one who also uses this. He actually writes it to just manually on a calendar, what's the net negative number each day. Here it is. Breadth sucks. There's no other way to describe this. And so even if we get these days like this, you got to look up here and you got to say, well, it's not as bad, but I know this is a new indicator to you, but this is bad, right? This is just telling you fade the rallies because this sucks, right? 52-week new lows continue to dominate, although it looked like they were going to close in here. But then you see what happened Friday, right? Even with this linear up rally, and this is a beautiful signature, by the way, right? This is buy, 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 all the way across the board. And then we get to Friday, right? Or Thursday, 14th. I say it's Friday, but you guys know what I mean. So right out of the beginning, and what I said in the morning call, and what what we've all been saying is, we need a continuation pattern to get above the ribbon, and we didn't get it. We got this drift down, cut the moving averages, the short ones here, and then it's just we're making lower lows, right? So the minute you start not advancing, your thesis would have been a continuation. All right, that's the bottom. I'm going to take off. It failed. Play the short. Your play there is to sit back and say, my thesis for this path is wrong. What's my other alternative? It's headed down. And then you saw we started getting some pretty serious selling right around, I guess that was what, 11 o'clock or so. 11:30 my time, 10:30 Central Time. So I don't know if that's helpful or not, but that's how I would interpret the CT. And so Monday, tomorrow, what am I going to write about in the morning call? Lower lows sucks. We're below the ribbon, bad. Breadth sucks. We need a reversal. I hate this type of reversal. Where it's right at the date boundary, right? And we're going to be right at the date boundary tomorrow morning. Bad news. So what we want to see is probably want to see a little bit more, blood in the water. And if the ES is any indication right now, right, the ES is looking like dog do, right? So the ES is down hard here, right? And so if this is any indication, we're going to open lower, right? Unless between when I go to bed and when I get up in the morning, unless this thing comes rallying back up in a big way, we're going to see the CT probably continue down. We don't get gaps in the CT. It's a cumulative tick, so it's going to pick up right where it left off, but it may continue downward as the selling continues, as the adjustments over the 3-day occur. And then what? Well, if we get an intraday type of reversal, that might not be a bad thing. Just depends on when it happens and how strong it is. So here's the takeaway, and I'm going to shut up. Look for these patterns. We call these linear up or linear down patterns. These are the most telling things that you can see either in your TOS platform or if you're using the TradeStation indicator. Watch for these. If you see this occurring, this is a linear down where the institutions, the filtered cumulative tick, is pointing downward. You don't want to be placing longs. Not until this thing at least minimally stabilizes, and then I drop down and I take a look at, all right, so I'm not at 1,000 ticks per minute. What am I doing kind of in the short term or, in the unfiltered, as it's stabilized? And then you can start developing your thesis. But man, I wouldn't try to pick a bottom in this type of environment because this just we failed. I mean, it's just pure, simple, ugliness in general. Here's a slightly different view of Taylor's world. Same thing. Russell, kind of horizontal. The SPY, a little more positive because of course the SPY is because it's being propped up by about only 5 or 10 stocks. Qs kind of the same thing, horizontal. You can see that here in the QQQ. So there's not a lot going on here that is what I would consider really constructive.
Gotcha. I appreciate you walking me through that. Last question. So would you say that the slope of the linear up or down is relative to like the price action, right? Like if you have a slope up, it's like, just shooting up. That range is not determined by the cumulative tick. It would be calculated by, let's say, what the range is on the morning analysis, right? The expected, I guess, like move on like SPX.
Well, I think you can see it kind of here, right? So if you draw the linear down, you can see the SPX. I have the SPX overlaid here. you can see what I would call dealer adjustments in here. The dealer is just taking money off the table. Dealer in the exchanges, right? I mean, it's just like go, 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 get it gone, right? Boom. You can also see no behavior here, yet we're getting some responsive behavior here into the close, and you're not seeing it here either, right? So there was no foreshadowing of a takeoff the next day, by the way. Just remember, whether the tick represents a million shares or one share, a tick is a tick is a tick. It doesn't infer price and it doesn't infer size of the transaction. All it infers for you is that it was so when we get a buy and the bid is raised, is the language. When the bid is raised, we get an uptick. Conversely, when we get a sell, we drop the bid or we lower the ask and we get a downtick. And when we take those in real time, we get this kind of behavior, right? So this is every minute. So it follows, your question is a great question. It follows that if you see a whole bunch of this linear down and it's got a really strong slope, that yeah, you should see a lot of price action one way or the other. In this case, down. Yeah, we should see down. Now, tick and the SPX don't always line up perfectly because the tick is not on the SPX, right? It's this is the USC, which is the all markets composite for the United States. So this has regionals, like Cincinnati and Madison and, just small, I don't want to say rinky dink, but small stuff. In addition to the big stuff, whereas the ARCX, much cleaner presentation, but it's only got 3 exchanges in it. So you get a very, very different type of flow pattern there. So yeah, I mean, if you see linear up, yeah, price is moving up in general, and look at your stocks. Same thing, you see price moving down, yeah, you probably should be looking at your stocks because, you could be, getting hit pretty hard. Now, we don't do it in the forum or in the channel, but I watch the Qs. This is the tick Q. Tick Q is the NASDAQ 100. SPY, which is the SP 500. So these are just the stocks that trade those, those particular indices. This is the Russell 2000. So here's small caps, and small caps just are getting hammered, and they've been getting hammered. And if we go back in time, you'll see they've been hammered. The blue has been on top ever since 311 of what year is this? Probably this year. Yeah. 311.22. So we've been over a month now, small caps have just been getting annihilated. Well, that's the confirmation. I could even go back and further. And small caps started giving up the ghost back on early March. And if you think back where your trades were in early March, you probably, if you were in small caps or in the IWM or anything that's an instrument of the IWM, you probably got taken to the woodshed starting right around 3-4, which is when we started collapsing through. You can see we lost the ribbon and we lost the main ribbon and we just started heading down from there. And we haven't recovered since then. So small caps clearly out of rotation, and any bounce up can be sold because it can. That's my story, and I'm sticking with it.
No, I appreciate you walking me through that and to get a lot more experience with you guys.
Our pleasure.
Indicator.